HIMS and HERS stock just lit up the market. Retail hype is soaring, weight loss treatment results are making headlines, legal threats are intensifying, and the pivotal earnings report is just days away. This is one of the most high-stakes moments in the company's history. And if you're watching this, you're here to find out whether we're looking at a breakout or a breakdown. Subscribe now to stay ahead, because what's coming next could move this stock in a big way. Let's talk about the biggest tailwind first. On July 29th, HIMS released data that could reshape its identity in the health sector. Over 13,000 users have participated in the company's compounded GLP-1 weight loss program. The results? An average weight loss of 20.9 pounds in just 6 months. That's roughly 10.3% of body weight. But it gets better. 75% of users stayed with the program for at least 6 months, and less than 5% stopped due to side effects. That's an enormous gap compared to traditional programs that often see dropout rates over 80%. The takeaway here is powerful. This isn't just another weight loss pill. It's a long-term, high-adherence platform that combines personalized digital-first care with compelling outcomes. That combo positions HIMS as more than a telehealth brand. It's a potential category leader in the digital obesity treatment space. Now here's where things heat up. Social buzz around HIMS has exploded. Reddit, X, Discord, you name it. People are talking. The short interest remains elevated, and that kind of setup has historically triggered rapid-fire price surges when momentum kicks in. We're not saying it's a meme stock, but the behavior lately looks familiar. The stock has bounced over 8% and is testing major technical levels. So what's fueling this frenzy? Part of it is the GLP-1 hype, but another factor is the sharp rebound from the June crash when Novo Nordisk abruptly ended their partnership. That crash had some calling HIMS a falling knife, but this rebound suggests otherwise. Traders are watching closely for a clean breakout or a quick rejection at key resistance levels. Either way, the volatility makes it a magnet for short-term action, and that invites fast hands and fast exits. Let's not ignore the red flags. After the fallout with Novo Nordisk, legal pressure started to intensify. The accusations? Deceptive marketing, improper compounding practices, and misleading investors about the risks involved. Since then, multiple law firms, like Gross Law and BFA, have initiated class action lawsuits. Shareholders have until August 25th to respond. Meanwhile, Novo Nordisk's new CEO Maziar is taking a hard stance against compounding practices that challenge their branded drugs. That means HIMS isn't just facing legal risk. It's now under a brighter regulatory spotlight. Investors are watching to see if any additional legal action or regulatory commentary drops during or after earnings, because any new headline could swing sentiment instantly. Let's pause for a second. If you're still with me, you already know this isn't a normal stock update. There's a massive push-pull between growth and legal risk here, but the most important detail, it hasn't all played out yet. The earnings call will be the breaking point, and what you're about to hear next could tip the entire setup in one direction. Before we continue, if you've been following this channel, you know I don't waste your time with hype or guesswork. I focus on research, real insights, and tools that can actually help investors. That's why I've partnered with The Motley Fool, one of the most trusted names in the investing world for over 20 years. You'll find my link in the description. It's the easiest way to check them out and see what they offer. That link also gives you access to special deals or discounts they have available right now. And yes, it helps support the channel too. Now let's get back to the video. HIMS is currently flirting with a buy point around $67 after rebounding from a 34% collapse. Indicators like relative strength near 98 and improving accumulation ratings suggest large buyers may be stepping back in. Meanwhile, Wall Street expects 151% year-over-year EPS growth and 75% revenue growth for second quarter. That's impressive, but not without caution. Analysts warn that growth could slow heading into third quarter and fourth quarter due to possible regulatory friction and legal costs. Still, the profit picture has improved dramatically since 2024, and projections show the company remaining profitable through 2026. The question is, Will investors see this quarter as confirmation or warning? August 4th after market close is when the spotlight hits. The second quarter report will likely be dissected in real time by analysts and traders alike. Expect scrutiny over new subscriber growth, margins, GLP-1 revenue impact, churn, and whether management addresses the legal fallout directly. Any surprises in guidance, revenue split, or updates on compounding could shift sentiment instantly. If everything aligns, HIMS could see explosive upside, but even a slight miss on expectations or a vague legal update could spark another fast drawdown. So here we are. HIMS is no longer flying under the radar. It's on every trader's screen, riding a perfect storm of clinical success, retail interest, legal tension, and massive earnings potential. This is not the time to make emotional decisions. Whatever your next move is, make sure it's based on facts, not fear, because what happens over the next few days could redefine how the market values this company going forward. This is it for this video, guys. Thanks for watching, and please make sure to subscribe, like, and leave a comment down below.